Hello and welcome to another edition of Better Informed. This week we've released our H1 property market report for here in Dubai, and as to be expected, it's been an incredibly busy period. Transaction levels have been at record highs and property prices have continued to rise, albeit at a slower, more steady single-digit rate than we saw last year. We seem to have thrown off any concerns about a slowdown as demand continued to rise, and crucially, we saw MOUs signed, new deals agreed in the last 2 months of the half year. May and June were 133% higher than they were the same period last year. So from that, you can expect DLD transaction levels to look very healthy through the summer. However, this was also a period where we saw a bit of a rebalancing between supply and demand. We actually saw demand increase year on year, but we also saw supply increase at a greater level, 36% in terms of new listings coming to the market with Betterhomes. And that was really about sellers looking to realise the current values that they can find in their homes. The result of that has been a bit of a normalisation between our ratios of buyer to seller. Last year, if we look back, it was around 18 to 1. It's really now about 10 and a half buyers registered for every seller, which is a much more stable and normalised rate. And that's why we're now seeing this more normalisation, stability within price increases. We've also seen a bit of a shift on the profile of our buyers in the last half year, away from end users towards investors. About a year ago, 42% of our buyers were identifying themselves as end users, and that's dropped this year to 32%, largely driven by off-plan prevalence in the market and also overseas investors attracted to these shores. While Indians were actually the most prevalent buyers here at Betterhomes during this period, it's Europeans that took the other 4 spots in the top 5, really driven here by the war in Ukraine and rising tax burdens in home countries, but also attracted to Dubai by visa reform, safety and quality of life. In leasing, we saw a fall in transactions in the first half of this year by 25%. That really is off the back of rising prices, apartment prices up 29% and villa prices up 64% on our data during that period. That is both a reflection of rising prices, but also an indication of the larger properties that are in demand at the moment here in Dubai. This rise in prices is keeping tenants in their homes, keeping them renewing, which is really why we're seeing that drop in transactions. As the economic storm clouds gather globally, weighed down by inflation, rising interest rates and tax burdens, can Dubai continue to be a net beneficiary of global uncertainty as it proved throughout the pandemic? Dubai continues to grow. Visa reform and business reform continue to attract new residents and new businesses alike. And with net yields above 6%, steady capital growth, the Dubai real estate market continues to outperform almost all other assets. So I really am confident of a positive H2. Please, for more information and the full report, do visit us at bhomes.com, and I'll speak to you very soon. Thank you.